Hello, everybody. Welcome to the Option Pit Ticker Highlight Show. I am Mark Sebastian, your only option. I am joined by the Queen of the Candles, Alicia J. Leslie, and Andrew T. Giovinazzi, the Viking of the VIX, the warrior of weekly profits. This week, we're talking JP Morgan. And you're saying, Mark, why JP Morgan? I thought AI. Well, take a look at a chart of JP Morgan, folks. This is the 6-month chart. On the lows in October, this was $130. It's now tried to breach 200. This thing has gone up rather aggressively. And what's interesting is they're rallying vol with it. Pretty aggressively. Vol, since this thing really took off, has gone from about 15 up to 22. Now, they've got earnings coming up in a couple weeks. I can't believe it's already earnings season again. But we're starting to head toward first quarter earnings, and there is a lot of buildup in JP Morgan. I mean, this thing has gone almost straight up. And, you look fundamentally, and maybe, in a market where we're looking for value, maybe that's part of the reason why JP Morgan's up so much. Market cap still, for how much it's run up, it's only about $600 billion, 573.
Dude, that is huge for a bank.
Which is big for a bank. They make a ton of money, though. All right. And the cash per share is actually greater than the value of the bank, but you actually generally expect that because it's a bank. They're supposed to have cash. But really, when you dig into it, a 12 PE for a big bank historically would have been about normal-ish. Maybe it's high for where JP Morgan has gone, but we're in an era of price earnings expansion right now, right? That is what is going on in the market. There are some companies making a lot more money. Most are not. But we're seeing the multiplier on their earnings go up. And that is part of the reason why I believe JP Morgan has had a nice run. They recently upped their dividend by 10 cents, which is nice. People like a dividend. And the stock itself, I mean, I think near term, it probably needs to pull back toward the 21. I mean, I'm going to let Alicia take the charts. But, if it's trading 190, it's probably going to 200. And like I said, if they want to expand these PEs, stretch PEs out, a quality bank like JP Morgan is going, and JP Morgan is the epitome of a quality bank, right? They do just about everything right. They
can.
What? Because they can. All right. And
because they're allowed.
So, yeah. And so this is one, certainly from a long-term holding with a nice dividend, makes some sense to me. Near term, maybe a little overbought, but if you're looking for a bank, a mega bank, this is the one to own. It's kind of jumped over Goldman. Goldman used to be the industry darling. It's kind of jumped over Goldman. It's worth 4 Goldman Sachs's. How many Morgan Stanleys is it worth? Yeah, Morgan Stanley's worth more than Goldman right now, which is interesting. But look at Goldman's PE of 18. Look at Morgan Stanley's PE of 18. We can pull up what's another bank? Citibank is 15. Fargo is 12, but Fargo stinks. So, you've got a 12 PE on probably the best bank, and then its 3 closest competitors, Citigroup and Goldman and Morgan, all have PEs that are higher. So from that perspective, you would look at Goldman and say, or JP Morgan and say, you know what? Maybe it's buy. Now I will pass it off to Leisha, and she will dazzle you with her Duchess of Doginess.
Yeah. So we have a little pullback off of our bearish engulfing candle on Friday after this tremendous run. As he said, it was in 135 last October, and literally straight up one pullback, literally a pause, zero, one other pullback here, literally one day, just straight up. So this thing is, I would say, bound for some kind of little type of correction. Although it doesn't need to go very far to find support. We're about 194.5 here, and then some more major league support, I would say 191.5. But on the upside, definitely, I would say 200s and its future, and probably 205, 204.5 for sure. Very bullish. Let me show you the
seems too
weekly.
Close to 200 not to get there.
Exactly. It's just a little pullback. And here's that straight up trend line. It should honor, if it does not honor that, and that comes in 191 there. If it does not honor 191, that's when you possibly decide to take a short. And look at that weekly. Just tremendous bullishness. So 94.5, 91 are my levels, and then 200 and 205. On to you, Andrew.
Okay. I'll do a screen share here. I'm on a laptop, so it's not my favorite. It's not my favorite venue, but it's what we got. And whoop, there we go. All right. So I can't see comments. Let me go here. Well, what do we have here for JPM? So, like Mark said, got some higher volatility here. I'm gonna go just, let's go out a little bit. Let's say 6 months, right? So you have like all the vols are kind of creeping higher here. And we're into an earnings on the 12th. So from a trade point of view, with volatility where it is, I wouldn't want to be like, it's not super cheap vol. It's like kind of sort of in a very meh area. And I'm kind of looking at the potential of 200 over. So we have earnings on the 12th. Let's just take a look here. So you have some lower vols here prior to earnings, because this is like basically going to hold the earnings day and the options for next week. So does it make a run? And I think this is definitely a little bit harder of a trade coming in, because you've got like a higher vols in the 20s, but the stock's just kind of sort of creeping up. I mean, it's really hard as a trade. Because you're either going to trade the earnings or you're not going to trade the earnings. And normally I would say if you have like cheap enough prices, it might be worth grabbing them, looking for these levels that Leisha was looking for, and seeing what we've got. So like an idea would be you hold sort of like the earnings cycle, like the 200 calls. I mean, they're kind of pricey at $2.50, but in the meantime, for the week, you buy the 190 puts for 74 cents. So it's like, okay, if we do have this pull off continues, if this little pullback continues, hits the support number, you're going to jettison your 190 puts. But you're holding the calls for what, I think would be just the inevitable. Maybe you could buy the 202s a little cheaper, right? Because the vol in these options aren't going to go down prior to earnings. So the whole idea is these options, if you do get a sell-off, the value of volatility is going to expand in the April 19th cycle. And then you're going to get a little trade to sell prior. So right now, like these 190 puts are pretty super cheap. All you really need to do is get them to double. We get any kind of a pullback at all. It tests some of those lower lines.
It's not showing your screen yet. You got to unshare and Andrew, it's not showing your screen yet. You got to unshare and reshare.
Oh, really?
Uh-huh.
Oh, all right. Oh, poop. So I just did this whole thing and nobody can see anything?
Now they can see it.
Well, it's like, that's right. How about now?
Yep, we could see it. We saw it the whole time.
That was
you
did?
I saw it.
Yeah, I did. The general public couldn't. But anyway.
Okay, so some people did some. Sorry about that. Again, I'm working remote. Not ideal, but it's what it is. So, so anyway, what I was saying is, you've got earnings of the 12th. You have the potential to test like that lower level. So the 190 put is pretty cheap at 76 cents. And then up here for the call, when our eventual move to 200 post earnings, you buy, I would say, a 202.5 call for $1.72. Because we're going to get, earnings come out. The banks have been ripping on earnings. And so basically you get the two for you'll get the trade lower on a slight retest, get something for your 190 puts, maybe $1.50, or better. You might get the 202.5 calls for nothing, and then we'll ride it up in the short term. So I would just say a simple strangle now, or door number 2, easy trade for me would just be sit here, look to see if this pullback is for real, and then look for an entry on the 202 calls. Something right around that level.
Yeah, I like the strangle. I do like the strangle idea. If you don't buy,
like as Mark says, you're not getting really, really low vol here.
No,
that's the reality. You're just not getting vol that's. So you want to, if you're trading it now, I would trade around the earnings cycle.
But yeah, I like the strangle idea, Andrew.
Huh?
I like the strangle idea.
Yeah, so it would be something like this. This is my little trade page to remind me of things I got on. So we buy like the JPM April. So again, the sell-off would be fast. You have to be Johnny on the spot to sell these puts for 75 cents. And then you're buying the good earnings cycle, and what I believe anyway will be the run to 200. Like, I don't see how it doesn't do that. It might happen before April. Was it the 19s?
Mm-hmm.
202, 202.5. So this would be a somewhat balanced strangle.
Just a little bit off from the calendar.
Yep.
I like to play that.
You're using the different terms to take advantage of what's going on.
Yeah, and you're only paying $250 for that. That's inexpensive.
And in a $200 stock.
What?
It feels kind of reasonable, right, Mark?
It feels super reasonable. I'm
going to give this to Christian here really fast. So you're going to put that out as a strangle, Christian. So you're going to buy one, and then buy to open one. All right. And then I also updated my trading notes from. There we go. And I updated my trading notes from on the Pit Report page. If you go to our homepage on the Pit Report, I updated the trading notes. I have traded the NVIDIA back a little bit. Right now, I rolled up I had some General Electric call spreads. I rolled them up to the 180s because we got to 175 in like 2 seconds. Amazon, let's see here. I'm very close. We're still got the 185 call. Anywhere I'm close to even on it, I'm just going to jettison it. I'll hold it, but Amazon's struggling to make some new highs, but it looks like it might. So there we go. GEI rolled up. Like I said, NVIDIA, we had those strangles. I closed the call strangle once. I bought another one, and I'm sitting on the put for it cost me $75. But it does appear that NVIDIA is going to 1,000. So
it's an unstoppable force.
there we go.
All right.
I thought the strangle was on the same expiration. And Jim, some strangles can be on the same expirations. Other strangles are not.
Yeah. This is like a variant of a standard strangle. It's not a standard strangle. It's a variant. Okay.
Because the weakness would be short term, and that's when, we're basically according to Alicia's analysis there. If it does a little pullback, we dump it.
Right. All right, everybody. So there you have it. We have a JP Morgan trade. We got an update on NVIDIA. We hope you enjoyed the Option Ticker Highlight Show. I am Mark Sebastian for Alicia J. Leslie, the Queen of the Candles, and Andrew T. Giovinazzi, the Vicar of Volatility. I am Mark Sebastian, and I hope you have a great trading week.